एक खास अभियान म्यूचुअल फंड सही है प्रेजेंट स्मार्ट निवेश सही निवेश पार्टनर्ड बाय टाइम्स नेटवर्क। हम आपके लिए म्यूचुअल फंड सिंपल है लेकर आए हैं और एक ऐसा सेगमेंट जो म्यूचुअल फंड के बारे में मिथ्स को तोड़ने के लिए समर्पित है। तो आज हम जिस मिथ को तोड़ रहे हैं वो है म्यूचुअल फंड निवेश पर इनकम टैक्स नहीं लगता है। क्या आपको लगता है ये बात सच है? आइए जान लेते हैं।
Hello and welcome to Mutual Fund Sahi Hai presents Smart Nivesh Sahi Nivesh partnered by Times Network. Now today we have this exciting segment where we clear up some common myths and simplify the world of investing. And this special segment is called Mutual Fund Simple Hai. Now, whether you're an experienced investor or just getting started, we're here to make mutual funds as easy and as fun as possible. Now, let's dive in. The myth for today is mutual fund investments do not attract income tax. Is that something you believe too? Well, we went across India and asked people what they think about this. Let's take a look at what they had to say.
इनकम टैक्स को कुछ म्यूचुअल फंड इनकम टैक्स अट्रैक्ट करते हैं, कुछ नहीं करते।
Yes. No, not at all. They do track this LTCG, long term capital gain.
I don't know about it.
इसके बारे में ज़्यादा आइडिया नहीं है, बट शायद हो भी सकता है उसमें।
They do attract income tax, but I think long-term capital gains जो हैं वो up to 1.25 lakhs is income tax free.
Yeah.
मेरे ख्याल से तो करती है।
इनकम टैक्स अट्रैक्ट करता है, उसकी यील्ड जो है उसमें इनकम टैक्स अट्रैक्ट करता है, लेकिन जिस किस्म से ग्रोथ आ रही है तो पीपल डोंट know this that they will be paying income tax on the certain growth.
Looks like there's quite a bit of confusion on that, but to help clear the air, we have with us an expert. We have with us Ajit Menon. He's the CEO of PGIM India Mutual Fund. Ajit, thank you so much for joining us. Your thoughts on this statement? Is it fact? Is it a myth? Please clear the air.
Well, Smith, I think that the important thing is to think about it in terms of the returns that you make from the investments that you have actually done. Now, you've put your capital in and you're earning returns out of it. So a lot of people think about income tax is paid on their salaries. And then, of course, based on everything that comes into the account by way of dividends or interest, or in case of mutual funds, the redemptions that you do, how is the tax, applied? So while there is a interest income that is, applied for whatever interest you get out of your bank deposits and things like that. You are also, if you're getting additional monies that are redeemed from your investments, that's also going to be obviously taxed in the year, but it's taxed in a certain way. It's taxed for capital gains.
Right.
So equity mutual funds will attract different taxation, fixed income will attract a different taxation. Where it's relevant to think about that taxation for people would be when they're doing these withdrawals, they are actually withdrawing some part of their principal and some part of their gains. And it's the gains that will be taxed and not the principal. So when you are trying to put all money into maybe some sort of a fixed instrument out of which you're getting an interest, that interest will be fully taxed based on the slabs that you have. But when you're doing a SWP from your mutual funds on a regular basis, let's say in cases of retirement and you're creating an income, then you're withdrawing some part of your principal and some part of your gain. And so even though the amounts that you require are similar to what you are getting from your fixed instrument, the tax implication on that withdrawal from mutual funds is lesser to the extent that only the capital gain part is, taxed. So your principal doesn't attract it. So I think that on balance, you would end up with a far lesser effective tax that has got applied to your capital gains when you're withdrawing it from mutual funds compared to other sort of flows that come into your account. So that's an advantage that you get, especially of the equity funds that you have. In fixed income, withdrawals are obviously, again, subject to, your slabs per se, but in equity, there are benefits of, shorter term tax and longer term tax. And even in your longer term, it's only above a certain limit that now the 12.5% applies. So, to some extent, it's free up to a lakh or so, and then above that you pay. So I think that's the advantage that one should be thinking about.
Thank you so much, Ajit, for talking to us and for busting that myth here on Mutual Fund Sahi Hai presents Smart Nivesh Sahi Nivesh partnered by Times Network. Thank you so much for watching and stay tuned to the channel.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.